Hello, friends. Friends, what seemed to be a perfect week, the initial start indicated that we would have a very nice week the week ahead. Turned out to be not so perfect week. It turned out to be a bearish week. Markets opened Monday with a almost 1.5% gap up, and it kept going up for the first few minutes, for the first maybe half an hour, 45 minutes. Around 10 o'clock, this news about escalation of tension between the India China due to the border issues came, and from there market just kept going down the whole day, and that day formed a huge red candle. The next few days it just went in a range, and on Friday, following global clues, market again fell. So after many weeks, market had a very bearish week this week. Is this the beginning of a large correction, or is it a small correction in the overall larger picture? The Bank Nifty was underperforming the Nifty very sharply. In fact, the Nifty was down about 2.5%, whereas the Bank Nifty was down about 6%. What was the reason for that? The key reason was a Supreme Court ruling which prohibited banks from declaring loans as NPS for the next few months. What were the other reasons? What do you think will be the market direction for the next week? Let's see it in this video. As usual, we'll explore quickly what the events were during the last week, what are the events that will dictate market direction next week, what are the option strategies that you can do. We will do a trend analysis of the daily and weekly charts of both the Nifty and Bank Nifty, and finally look at some share which could be possibly a good buy. So let's see where the markets are headed next week in this video. So friends, Nifty opened this week on a very strong note, almost 1.25% up, almost touched 11,800. It came to 11,797, and then by around 10, the news of the India-China tensions resurfacing, that brought the market down very sharply, and the markets formed a huge bearish red candle that day. The next couple of days, 3 days, it tried to go up, but it wasn't able to either go up or down. It was more or less small candles. And then finally on Friday, a follow up to the global sell off that happened on Thursday, the Indian markets also fell. And finally, they closed the week at 11,333, which is down about 2.7% from the previous week. Bank Nifty also followed a similar pattern. It opened up very strong. Our target for the week was 25,500. It came to 25,260, which is almost 500, 600 point above Friday's close. But then the border tension news caused it to fall down sharply. And it finally closed the week about 6.2% down at 23,011. Mid caps and small caps had a bad week too. Mid caps were down about 2.5%, small caps were down about 3.17%. The big bad news, I think, would be the VIX. The VIX went up sharply 22% in a single week. That indicates that there is a lot of uncertainty in the market and there could be large movements in the market. The VIX went up from 18.35, which was one of the lowest in the last few months, to 22.15, a huge spike of 22%. A lot of market news happened last week, most of them positive, a few really negative ones. On Saturday, we had news that Reliance was taking over the retail business of the Future Group for about 25,000 crores. The Supreme Court gave its verdict on the AGR front. It is something which the telecom companies and the markets were looking forward to eagerly. It was a reasonably good verdict. It was a relief for Bharti and Idea. So Bharti gets 10 years. Both the companies get 10 years to pay their dues. So Idea will survive, and now it's looking at fundraising for further expansion. Hindustan Aeronautics had come out with an OFS, the offer for sale, and both the retail and the institutional portion were both oversubscribed. There was good news in Adani Group also. They got licensed to operate three new airports, and Adani Green emerged as the world's largest solar company. That's something we could all be proud of, that the largest solar company in the world is now an Indian company. GDP of the first quarter came, and that was more or less on expected lines. India had one of the toughest lockdowns in the world. April and May were complete lockdowns. So it was not surprising that the economy contracted by about 24% during that quarter. The August PMI data that came for India showed a reasonably sharp recovery. China's August PMI is also positive, which means that the economy is on its way to recovery. But all these positive news were generally overshadowed by the big bad news of the India-China border tension resurfacing. There was another surprising news, that was Supreme Court's direction to the banks not to declare NPS for the next 2 months. That is, if they don't receive back a loan, they cannot be declared as NPS for the next 2 months. Hearing is on the moratorium. There is also a big issue about whether compound interest can be charged. The next hearing is on 10th of September, which also turns out to be an expiry day, and we could have sharp movements on those days. The new margining system of pledge and repledged also kicked off from 1st September, and that too created some confusion and operating issues in the stock markets among brokers and clearing houses and exchanges. On Thursday, we saw a global sell-off. The Nasdaq and Dow Jones crashed substantially, one of the biggest crashes in recent months, and that had a telling impact on Indian markets on Friday. Uh, so next week we would continue to follow the global market, something that we've been doing for months together now. The US markets again weakened on Friday, which means probably India also would open at least weak on Monday. Unlock 4 things are normalizing, including the public transport. Slowly, they are being opened up. That's something to watch out for. And another big thing next week would be the Supreme Court hearing on the banks moratorium, which is on the 10th of September. Also need to keep a very sharp eye on any news on the India-China border tension. Markets are already weak, and if the tension escalates, markets could turn weak further. Now let's look at the FII and DII action the whole week. FII sold shares worth about 3,800 crores, and the Indian institutions sold shares worth about 1,100 crores. So they were both sellers during the week, and totally they've sold shares worth about 4,900 crores. Coming to the charts, as you can see, Monday was a huge black candle, red candle, and after that you had three small candles. The market tried to recover, but they were in a sideways movement, neither a big rise nor a big fall. And on Friday, following global markets, the Indian markets tanked and closed at the low of the entire week. One thing we need to notice here is that now the markets have come to the 21-day EMA, where it normally in the last few months has taken support and normally takes support around these levels. Will it take support now? That will depend on the global markets. It will depend on the India-China border tensions. It will depend on the Supreme Court judgment. The best thing to do would be to step on the side. The strategy I typically follow is that I would only be on one side of the market, and that is generally on the bullish side. If the market is not in my favor, I simply take a step back and I wait for the market to correct and then take my positions. Uh, I think that's a reasonably good strategy, because if you do a strategy of long and short, it very often happens that you get hit both sides. For example, you could be long, and when the market turns bearish, you could square and go short. And if the market recovers, you could get hit both sides. So everyone has their own strategy. My favorite strategy is that I would be generally long. If the markets are negative, I don't take my positions, or I keep my positions to the minimum. I take a side step, but I also make sure that I'm generally protected on the downside, either by way of puts or by way of some long butterflies and things like that. So coming back, if the market sustains 11,300, you could see a bounce back. But if it moves below that and sustains at the 11,250, 300 range, then we could see the market going down to 11,100. Looking at the weekly charts again, if you have watched my previous video on candlesticks, what you see here is a big black candle. It's a bearish engulfing pattern, which is a sign of weakness. So what you see here is you also see that there are no upper and lower shadows, which effectively means that market opened at almost high of the week and closed almost at low of the weeks, which is a bearish sign. However, on the weekly charts, typically the indices take support at the 5 week lines, and the market is almost there now. If we take support here, we might see some bounce, minor bounce, but otherwise you could again see a fall. The range that we expect for the Nifty is 11,000 to 11,600. Coming to Bank Nifty, almost a similar chart, but it has a shadow here on Monday. It underperformed the Nifty sharply. It was down basically because of the Supreme Court. Other than the market normal situations, the Supreme Court verdict on the NPS also had a negative impact. That's why when Nifty in the next 3 days was trying to move up, Bank Nifty actually was going down. If it sustains below 23,000, the next support is 22,500 or even lower, whereas this resistance is at 24,000. Here also we would generally prefer to be on the sides, basically because there is an event coming up of the Supreme Court judgment, which is on the expiry day, on the 10th of September, the weekly expiry. The weekly charts also show a bearish piercing candle higher than the previous high but closing lower than the previous close. So this is what you see here. This is also typically a reversal sign, but again it is close to the 5 week average. Could take support, but best avoided for now till the event is behind us. If to summarize, our outlook for the week would be they are both Nifty and Bank Nifty are highly uncertain. If you watch our previous videos, for the last many weeks, in fact almost for 10 weeks, we have been bullish in the market. But now this particular week, we don't have a direction. The market will have to tell us a direction. The bias seems to be negative, but I would like to wait for a confirmation. The Nifty is very close to 5 week average where it generally has taken support, but it's best avoided. If you are a high risk trader, you could go long at 11,300, but keep a stop loss at 11,250. If it sustains at 11,250, 300, the next level it could go down is 11,100. Bank Nifty, because there is a Supreme Court hearing on the bank moratorium, which could work both ways. There could be very sharp moves. So whichever side position you are taking, please make sure that it is protected with either a call or a put. If you're short, you should be buying a call. If you're long, you should be buying a put. And now let's come to the weekly option strategy. This week, since the bias of the chart seems to be on the negative side, we are suggesting a bearish broken wing butterfly where you would buy one lot of 11,300 put. The market closed at 11,333. You would buy a 11,300 put, sell two lots of 11,100, which is the next minor support level, and then buy one lot of 11,000 call. So here what would happen is, this is your payoff graph. What would happen is, if the market closes at 11,100, your profit will be 12,333 rupees. If it goes down after that, normally in a butterfly, beyond a point you would start losing money. But here, because it's a broken wing butterfly, your profit would still be 4,800, irrespective of how down the market goes. You would still make 4,833 rupees. However, if the market goes up, The maximum loss that you can have will be 2,666 rupees. So if you see the peak loss and peak profit risk reward, it is 1 is to 5, which is a very good risk reward ratio. Another thing you could possibly do, a lot of people do with this, your maximum loss is 2,600 rupees, but you don't even wait for that. If you at any time lose half of it, which is 1,300 approximately, you square off your position. That is, if the market is going against you and you lose 50% of the maximum loss, you square your positions. But if the market is going in your favor, you retain the position and maybe you could make anywhere between 5,000 to 12,500. Coming to individual stocks, generally in a market which is falling down, it is best avoid buying any stocks. But in case you have to buy, we would probably suggest Bandhan Bank because this is a relatively safer chart. If the market goes down, this can also go down, needless to say that. But the chart looks relatively safer. So if the market opens weak on Monday, Bandhan Bank at about 304 rupees, which would be around these levels. It's been around these levels for some time now. You could possibly look at buying it and keep a tight stop loss at around this level. That is around 296. You can keep a stop loss there. So your loss would be at best about 8 to 9 rupees. But if the market recovers, or if Bandhan Bank, which seems to be relatively stronger moves, you could see a reasonably good upside to about 325 to about maybe 330 ranges. But this is a high risk trade. Markets are weak, and uh, you have to buy only if you actually have to, if you want to buy a stock. Wait for a small correction and then buy it. So, friends, this is it for the week. If you found the video useful, please do like it, and please do give your comments on the video. It will help us improve. It will encourage us to post more videos. Thank you so much, and please do subscribe to our channel. Thank you.